Investors and traders, welcome to the channel Market Chart Pattern. Today we'll be taking a look at the Forex exchange. We'll take a look at the US dollar index and then the key currency pairs that we watch, which are the EURUSD GBPUSD USDJPY and Australian dollar versus the US dollar, and we will also try to take a look at the Canadian dollar versus the US dollar. This video is for educational purposes only and it is not a financial advice. So guys, what we are looking at is the daily chart of the US dollar index futures. And here, if you recall from our video which we had done last week covering Forex, we were looking at this pattern formation in this triangle here, and we were anticipating for the dollar to get stronger because of the pattern formation and the key Fibonacci level of 78.6% retracement coming around 102, and also the ABCD pattern formation. However, over the course of the last week, we didn't get a strong move out of in the US dollar. In fact, the US dollar traded lower, and on last Friday we began to get some movement to the upside in US dollar. Now last month was is over. Last Friday was 31st of March, and 31st of March is just not a month end, it's also the quarter end. So around that period there is a lot of movement in the foreign exchange, where companies are having to move funds within continents, regions, etc. So there are many things which happen, but the interesting thing is that our pattern is still not broken, because the price hasn't moved lower than the low of 23rd of March 2023, which was at 101.55. So what we are anticipating for this week is we'll have to watch really carefully in the US dollar, whether the US dollar will actually strengthen from here as per the pattern which we are watching, or if it is going to move lower by breaking this support at 101.55. So as long as it remains above that, this pattern is valid in my opinion, and we'll have to be watching the price action. Here the key level to watch is this level of around 104.70, because that's the level of this swing high here. So it is possible that the US dollar might get strengthened and move higher, but as long as it remains below this swing high, actually it's a candidate for a sale, which means that the strength might actually turn into weakness, and it might be another pattern formation which we'll discuss later on to the downside. Now if it begins to close above this, then what is possible is that this ABCD pattern that we have drawn, taking it right to around 106.70 level, and then we have the 106.06 level that we had been watching for quite some time, which is 38.2% Fibonacci retracement, which wasn't hit exactly right here. That pattern might come into play. So this is what we are watching for the US dollar. So just to summarize it, as long as the price is trading above 101.58, which is the low of the 23rd of March 2023, we are anticipating some higher movement in US dollar, and this entire region where whether it's not able to take this high out, perhaps it remains a candidate for a sale, but in the short movement we are expecting some strength to come in US dollar. Now let's take a look at the Euro USD. Now the Euro USD is about 51% of the dollar index, so it's pretty much the inverse in other case. And what we have seen is that we had been watching this level of 1.09 and 1.0924 for quite some time, because that was the 78.6% Fibonacci retracement, and also we had a 1.618 expansion here. Here what has actually happened over the course of last week, the price did not continue moving lower, which we had initially anticipated, and we had actually drawn this area region where the price could actually move to. However, what happened is price has actually gone and tested these highs of 23rd of March 2023 one more time, and it was not able to successfully take that level out, and in fact it formed a double top. And here last Friday's 31st of March price action is actually an inside bar, so we have to be watching this very carefully whether the price is likely to move higher and actually break out of this double top formation, which we think is the unlikely scenario, and the preferred scenario is that actually the EURUSD will strengthen, weaken against the USD, and the dollar will is likely to strengthen. This is the kind of bias for the next week. However, we remain dependent upon the price action. If this point is convincingly taken out, then of course we have another cycle which could take the price higher, but the bias is towards the downside. We'll have to watch the price action really carefully. Let's take a look at the GBPUSD. So the sterling dollar, now this one has been an interesting one because it's just been going in a sideways price action for pretty much the beginning of the year. And in our last week's analysis, we had actually identified this 78.6% Fibonacci retracement level as being a key resistance level, and price did move lower from there. However, last week price actually broke above that, and here we have to redraw some of our things. The price still remains below this point here of 23rd of January 2023, and that is important because what it means is that the ABCD pattern that we are looking at, the C point, although it's a little bit inconvenient, but it still remains below that, so we'll have to just adjust it to this new level, and then we have to redraw if indeed it is moving in this ABCD pattern formation here. So just like the EURUSD, the bias is perhaps towards the downside, and we'll have to watch for key level formation per the price action to make further decisions. But it is likely this currency pair is also going to face some pressure to the downside. Let's take a look at GBP USDJPY. So this is the pair which actually moved higher as we were discussing in our video last week. Now, one of the things about this currency pair is that when it faces resistance, it is either at a 38.2% or 50% retracement of the previous swing, and this is exactly what it seems to have done. Here we had actually identified in advance this brown line of 132.98 level, which was around the 38.2% Fibonacci retracement, just a little bit above it, and the price has actually consolidated last Friday, although it did move pretty much higher, but then closed lower to form this doji candle here. Because we have just we were discussing based on the dollar index, if the US dollar is going to strengthen, then there's more likelihood of this currency pair moving higher, and then what we will have to watch is this this key level of 135.09. Let me actually put something like this here. Moving above this actually increases the chances that perhaps it is moving in an ABCD formation higher to go to around 139.50 level, but we are dependent upon the price action, so we'll have to wait and watch and then make our decisions. Let's take a look at the Aussie dollar. So the Aussie dollar is just really stuck in a range and it's just not doing much, so we'll just have to watch for the price action here. Just nothing too much to do, but it's related to commodities, and commodities actually do well when the US dollar is weakening. Here I think it looks like this will remain under pressure, and if this is a range bound trading, then there's a possibility it could actually move and retest the lower end of the range one more time. Let's quickly take a look at USD CAD. So the USD CAD, it seems to be where there was a lot of action in terms of the Canadian dollar actually strengthening quite a bit. One of the key levels in our previous videos we were watching for was this 138.23 because of the 1.27 to Fibonacci expansion level, and here it has moved lower, but what is interesting to see is it is reaching this level of around 134.90, which is gonna be the 61.8% Fibonacci retracement, and perhaps it is likely to find some support around this area. So I'm just gonna mark it here, and we also have this brown line. If the US dollar is gonna strengthen a bit, that could mean that it might just consolidate around this area and maybe even move higher. So the key level for us to watch will be this. If it indeed does that, the 38.2% Fibonacci retracement, so we'll be watching at 136.10 level very carefully. So let me actually mark this like this. So guys, this is all for the Forex. If you like our analysis, how we look at the markets using pattern recognition and the key Fibonacci retracement levels, then please do subscribe to the channel. And if you like the video and found it of educational value, then please do hit that like button. That way I know that my content is consumed and liked from an educational perspective, and just encourages me to keep on producing more videos for educational purposes for you guys. So thank you very much. Good luck and good trading.